cash flow statement is the third statement in the domain of finance that all of us need to understand to have a good understanding of finance. And remember, as I mentioned yesterday, if there is something which is easiest to learn on this earth, it is finance. And why is that so? It is because basic is the language of money. Everybody understands it. Somebody who is educated understands it, and somebody who is not educated, he also understands it. As a matter of fact, the experience shows the people who are not formally educated, they understand finance much better than others. Cash flow statement, remember, is the most crucial statement for any business organization. The chief executive officer, the board of directors, the chairman, the owners, the investors, the private equity, the CFO, every one of them is interested in one single statement, and that one single statement is the cash flow statement. If you are able to have a control on the cash flow of your business, remember, by default you would be able to have a control on the entire business of yours. And that is the significance of the cash flow statement, and that is the importance of cash flow statement. And that is why we need to understand as to what is the cash flow statement, how it is prepared, number one, and how it is interpreted for the purpose of decision making. Now, at this juncture, I would also like to mention to all of you, and that is cash flow is why it is so important. And remember, cash flow is important because what is the lifeline of a business? What is oxygen of a business? And remember, the lifeline of a business or the oxygen of a business is not anything else but the cash flow. Which cash flow? Cash flow which is getting generated from the operations of a business. That is the lifeline of a business. Please pay attention. It can happen. A business can get cash by way of debt, but the cash coming by way of debt is not the lifeline of a business. The cash coming into the business by way of debt can help the business in growing. But remember, with the borrowed capital, you cannot live a long life in the business. Equity is another source for bringing cash into the business. And remember, that cash which comes by way of equity will not have the interest burden as in case of debt. But equity also has a limitation. Unless and until a business is making profit continuously, no investor would like to put his money into the equity of that company. So therefore, equity is also not that important as in case of debt. Then what is important as far as the cash is concerned? The cash which is getting generated from the operations, that is the most important cash for any business. And that is why, remember, all the top executives of all the business organizations across the globe are constantly focused on the generation of cash. And that is why they are constantly focused on EBITDA. And that is the reason why every company across the globe is always harping on EBITDA, 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 EBITDA. Because what is EBITDA? EBITDA is the cash that is getting generated from the operations of the business. So higher the EBITDA, higher the cash profit, the operating cash flow from the business, so much strong that business is. And no rocket science, why that business is going to be so much strong? Because more the cash that the business is generating from its operations, that means more investable funds are available with the company for undertaking the modernization, diversification, expansion, and growth projects. And more the growth projects, remember, more that business is going to grow, more the business is going to grow, stronger it is going to become. And that is the significance and importance of the cash flow statement for any